Jobs coming in. Headline numbers weaker than expected. Let's get to Steve Liesman for more on what was underneath the headline. Steve.
Yeah, Sarah, the August jobs report disappointed in two ways. First, it came in below expectations. Second, in the mix of having good and bad data, it didn't provide the definitive judgment on just what's going on with the economy that some had hoped. Let's go through the numbers. Non-farm payroll is 130. We were looking for 150, so there's a disappointment. We revised out 20,000 jobs from June and July combined, the prior months. But average hourly earnings on the positive side, unemployment rate remained low, and more people came into the workforce. Labor force participation, 63.2%. So let's go through the good and the bad. On the good side, we got the rising wages. We have growing labor participation. Temp help was on the upside, and a strong household survey that Larry Kudlow spent a long time just talking about. The bad side, headline payroll we missed, downward revisions, and really modest private sector job growth, just 96,000. So that's like we have all this difference in opinion when it comes to really reading this number. Jeffries writes the headline increase in payroll is disappointing. All the peripheral data is really pretty good. But Lombard, they write, when the numbers soften like this, the economy is slowing, period, full stop. Where were the jobs and where weren't they? Government added a lot. A big chunk of that was added for the census, plus 34,000 on government. Education, health services, plus 32,000. But temp help came in up 15. Construction, 14. Leisure, hospitality, 12. Manufacturing was weak at 3,000 or 4,000 right there. So, been some strange movements this morning in the outlook for what the Federal Reserve will do on interest rates as a result of this number. There's now a modest bet in the futures market that the Fed remains on hold in September. It's small, still a 98% chance of a cut, but a slight chance of a hold. That compares to a slight chance of a 50 basis cut earlier in the day and yesterday. Now, a 67% chance, two-thirds chance of a rate cut in October, about what it was, but now a 33% chance that we don't get that next cut. A little confused by this, Sarah, because otherwise, since the number came out, rates and yields have come down. But there's been this interesting shift where the market not quite so aggressively pricing in the Fed this morning.
I think that October question is going to be key, especially as we wait for Powell this afternoon. I would add another one. I don't know if you hit the average weekly hours worked.
Yeah.
And also, you know, a sign, like people were very worried in July when businesses showed that they were starting to cut hours, and it looked like that rebounded. So that was overall a good sign. I mean, it's not a recessionary number, right?
No, it's not. It's not. It's, you know, you said it pretty good in the intro to me, like, it was a pretty good number. I mean, you could go either way with this thing and how you characterize it. 130. I will say two things very quickly. One is that we got to get used to these lower numbers for two reasons. One is that we've been overperforming in general on the jobs market. But second, remember you had that big benchmark downward revision of 500,000 for the year ending March 2019. That suggested the run rate of the of job growth was 41,000 a month lower than we previously believed. So this is a normal number. This 130 to 150 range is the new range, I think, and it used to be sort of a 175 to 200 range.